You're buying a practice and have agreed on the price. Now it's time to select the best business structure. When you buy the assets of a practice, you're buying its patient list, equipment, website, and other assets, but not the entity itself. This protects you from the former practice's obligations, like responsibility for past performance. For example, if the seller is sued for malpractice after you take over, you're protected because your business is not the same one in which the services in the lawsuit were rendered. So what business structure should you choose? In Florida, an S-corporation is often preferred for tax purposes. An S-corp requires you to pay yourself a reasonable compensation that allows you to avoid the state's corporate income tax, since your compensation isn't subject to it. And because Florida doesn't levy an individual income tax, you'll only have federal income tax on your salary and the practice net income. Your LLC or corporation can elect to be taxed as an S-corp by the IRS. LLCs are more flexible in that they can be either disregarded, a partnership, a C corporation, or an S corporation. If you're the sole owner, your practice will be considered a disregarded entity. This means it won't need a separate tax return. You'll just have to file your individual tax return. For this reason, the LLC option tends to be popular, especially with smaller or newer practices that earn less money. However, if you'll co-own the practice with one or more people, your LLC will be automatically considered a partnership by the IRS. In this case, you will have to file a separate tax return for your practice. You could also choose to have your LLC taxed as an S-corp. In this setup, the salary you take, that reasonable compensation we mentioned earlier, is documented on a Form W-2 each year. However, you can also take distributions beyond that salary. These distributions are not subject to Social Security and Medicare taxes. This is a good option if you're buying a larger practice that brings in more money, so your profits are enough to consider distributions. But if your practice isn't making significant profits yet, it's generally best to start as an LLC treated as a disregarded entity. Once your net income is significant, you can switch to an S-corp status at that point. Enlist your healthcare CPA to guide you as you make this and other decisions that impact your practice's profitability.